Hey, good morning, everyone. Last week, let's talk about what happened last week with rates, what buyers should watch for this week. Last week started off looking pretty positive for mortgage rates. Jobs reports came in much weaker than expected. Economy added only 57,000 jobs. Economists were expecting almost twice that. Then we got even more positive news for rates. April and May payrolls were revised lower by a combined 74,000 jobs. Household survey also showed that more than 500,500 full-time jobs were lost. Now, normally, weaker economic data helps mortgage rates improve, and initially, that's exactly what happened. But by the end of the week, mortgage rates moved higher. Why? That's a great question, by the way. One of the biggest reasons was comments from Cleveland Fed President Beth Hammack. She continued to express concern that inflation remains a problem. In fact, she suggests oil prices can be inflationary, whether they're moving higher or even if they're moving lower. Now, this all depends on how they impact the broader economy. Those comments reminded investors that the Federal Reserve may not be ready to cut interest rates anytime soon. As a result, mortgage bonds sold off and rates came back to some of their higher levels. It's just another reminder that mortgage rates don't move just because of one economic report. They move based on what investors believe is going to come next. So let's talk about interest rates here. Let me bring them up here if I can. We're looking, today's rates are approximately this. VA is looking at 6% with the APR 6.233. FHA is sitting at 5.99, APR 6.723. Conventional sitting strong at 6.5 with an APR of 6.638. And you have, of course, jumbo sitting at 6.25 with an APR of 6.36. Keep in mind the assumptions here: 780 or higher FICO score, 25% down for jumbo and conventional, and these rates are shown with no points. Now, let's talk about this week. Tomorrow, we get ADP Unemployment Report. This will give investors another snapshot or another look at hiring before the government's next jobs reports. If hiring continues to slow, this could help mortgage bonds. On Wednesday, we get purchase applications. This is actually very important for you. This tells us what buyers are doing. Are they in or are they out? But more important to you, it's a gauge on how much competition you can expect to have in the market. On Wednesday, we'll also get the Federal Reserve meeting minutes. This is probably the biggest event of the week. The minutes won't change policy, but they'll tell us what the Fed officials were discussing behind closed doors. The bond market will be listening very, very carefully to this. Then on Thursday, we get weekly jobless claims and also existing home sales. Now, together, these reports will tell us whether the labor market, the housing market, are continuing to cool, or are they going to heat up? One more thing that buyers should know, that's you, by the way. On a national level, housing inventory continues to improve. Buyers have more choices. They have more negotiating power, and in many markets out there, more seller concessions. But remember, this is super important. Real estate is local. What's happening nationally may be completely different than what's happening locally. And by the way, in your neighborhood could be a lot different than somebody else's neighborhood. This is why having a great local realtor, I can't talk right now, is so important. They're going to know things like what's happening, like even street by street, by the way, not just headline by headline. So if you don't already have a great real estate agent you're working with, I will tell you, we work with the best, and I would be happy to recommend and introduce you to a great real estate agent. And if you're wondering whether now is the right time to buy, well, that's simple. Let's schedule a free strategy session. Let's create a game plan for you based on your short-term and long-term goals, your finances, and your timeline. Now, here's what I want to leave you with. If you are waiting for lower interest rates before you jump back in the market, I have to tell you, a lot of people are doing the same. If you look at the math, as rates go down and more people come in, you're going to expect more competition and you're not going to get a great deal. Or you'll get a great deal, but not as great of a deal as you would if you went today. Let's get a strategy session. There's a strategy for every market. And with that, I'm starting to ramble. I hope you have